Welcome to Trading Lounge and the Bitcoin report for the 10th of October. So on the weekly chart here, we've been viewing this in terms of wave 1 over here, wave 2 here. So this wave 2 is obviously going up for a large wave 3 in that case. In that wave 2 to wave 3 that's going further up, there will be 5 waves in that sequence in terms of wave 1 and 2 here, and then 3, 4, 5 to make that wave 3. And then between this primary wave 2 here to primary wave 3, which will be further up here, there will also be 5 waves of 1 and 2 and 3 and 4 and 5. So at the moment we're looking at being at 1 and 2 and 3 here and 4 and 5. So let's go in and take a closer look at this here. There is a bearish case for this as well, as you probably know. But what I can say about that, that if this top here is taken out, then that bearish case is finished. Because at the moment we could look at this move up through here, as I would have mentioned before. It's in 5 waves here, so it's possible that this here can be down for an A wave here, and then an A and a B and a C wave finishing here. Right? In that case, we would rally back up, and then we would move down again for that. Now, there's a couple of things we can look at for that. Let's just go in and have a closer look at that particular point that I mentioned here. So, if we take this move through here, if we take, well, at minimum this move coming into this space here, we can see that the 61.8% is just on the top of this level here. So that means that if that top gets taken out, then that bearish case is diminished at that point in time. And it certainly looks like that's the case. So what we do with our trading, if you know the trading levels and how I operate, this is a classic trading levels pattern here, where we have the arrival, the reaction, the first high above the level. So that reference point comes in here. So we always look at that as a trigger point, but we also understand too that the market will drop from that, so we can bring it down to the second high here. But we can also just continue to bring it down through here until we get triggered in, and we can even bring it down to this one here. So that's basically what we're doing. So yeah, as long as I mean, the more that you understand how I operate, then the more that you'll know what to do and when to do it when you see it, so to speak. But yes, taking out that top would make the whole market bullish. But we could also use this one. We could also use this one here too, because of that 61.8%. This will be 61.8% of the whole move down, this one here. So we don't really need that there for the time being. One of the things that I've mentioned before, we've got this down here as 3 waves. So it's a little bit short in terms of pulling back to the 50-60% retracement level here. So we've wondered if, you know, we can see this as some type of corrective pattern coming up into this space here and then moving down into this space here. There's a possibility for that, and then moving up from that point there. But there's also a good case too. I know it doesn't pull back to the 50-60% retracement level here, but there is a good case that this wave 2 here is already in play here, and we're just going to head straight higher from that point. So let's just go in and have a little look at that. Well, we can look at it in 2 ways. Let me just check here first. So this would be the count here. So we can look at, if I copy this here, which I'm actually quite happy with this count, by the by. The other point too is, you know, we know that gold has been in a correction, but gold started in early September. This was about the 17th of August, 18th of August or something here. So a little bit earlier, but they've been in corrections and they're moving on. And so is the S&P 500 too, by the by, you know. So it's a good chance for these guys to lift. I can see this here as a bullish pattern. We all see we all see things differently. I mean, I see it in Elliott terms. You might see this as a cup and handle, all those sorts of traditional analysis, so to speak. But there's a good case here for this being wave 1 here, wave 2, wave 1, wave 2, wave 1, and wave 2 here, moving in to a third wave here. So we should see this, we'll just see it continue to push up. I mean, that's just it, you know. So if I just go to a smaller degree of structure here, we can see it like this. So we've got our ABC correction here, and we've got wave 1 here and 2, wave 1 and 2, 1 and 2, and we're going into the third wave now, and the fourth wave and the fifth wave, and then of the third and the fourth, and then it just building to the upside here in fractals. So yeah, I mean, going long above here. I meant to get this video out yesterday, but I did the gold one instead. But yeah, so taking this high out, this high out, and this high out here are all positive moves. What we'd really like to see, though, is we'd like to see, in terms of the trading levels, this market's all about the 10,000 really. So if I just go back to the weekly chart here for a moment. So as you can see here, the 10,000, which is trading level 1 here, this is the balance point, because this is a overshoot pattern here. So the distance it moves above the level here is the distance it moves below, just as a rule of thumb. So if I can just bring up that, as you know, we'll just go through this because I think it's important. We don't often see the we only see the overshoot pattern in new markets. So this is the regular pattern here. So if this is a level here, we would see the arrival, the reaction, the first high above the level, ABC correction, and then moving off from this point. And in Elliott terms, this is normally the third wave, fourth wave, fifth wave, ABC here, wave 1 and 2, and getting us in here. And it happens across the level here. The variation on that particular pattern is where it doesn't come below the level again here and just climb straight up. But because we use the first high above the level as our entry point, and then the second one, and then possibly a third one, and that's exactly what we're doing in Bitcoin at the moment. And the other pattern here, these are my three patterns. These are the, you know, when a market reaches a level, it's either going to have a correction at the level of it, or it's not. So it's either going to go straight through and never come back. It's either going to hit the level and drop and never come back. But if it's going to stick to the level, then these three patterns are basically how it's going to occur. So when it doesn't stop here, it will move further up, but I always expect it to come back down, and then we find this level here as the balance line here, and this is really what's occurring at the moment. With Bitcoin, this is the 10,000, which we call trading level 1, because you know, we use the golden mean or the golden ratio as a price ratio, so it expands it in terms of geometry. So we look at the Fibonacci numbers 1, 2, 3, 5, and 8. And then at 8, we can go to 13, 21, 34. But when we go to 21, we're far better off going to 20 at that point, like in this case here. So we would go 1, 2, 3, 5, and so on. There's levels in between that, of course, but I just wanted to point out that this is the balance point here, and you know, it can move up from this point. You know, we may not get this pullback in here. I mean, in terms of Elliott, this would be the logical thing for it to do, but it doesn't have to do that. And yeah, so it can just move. It doesn't have to come back below the level. It can just push up, and we'd normally go high here for this, above this high, but we can get better entries, and this is exactly what we're doing here at the moment. So just wanted to point that out. So it's testing it as support here. So really, in this little pattern here, we're looking at this pattern here where it doesn't come back below the level, so we'd use that high and that high, but we're also moving in through these little highs in here as well for this. So it's very practical, and it will get you on the right side at the right time for this. So This is it here, but we're just bringing that down to the next level and to the next level here. Now, it is possible that we could shift this here and put this here and have this as some sort of A wave, B wave here, and then a C wave up here. But in looking at this here, if we looked at this as, if you know Elliott a little bit, if we looked at this as wave 1 here and wave 2 here, and then this would be wave 1 and 2 here, then it would be like 3, 4, and 5 to this point. Well, then this one here would be all of the third wave with those 5 waves in it, and then the fourth, and then the fifth. So we're way up here, you know. So the other point too is that a wave 2 is normally a zigzag pattern. So if I can just point out that for a moment. I know this could be a bit basic, but a zigzag pattern is market comes up. We have 5 waves in the first leg, 3 waves in the second leg, and then 5 waves in this leg here. And it's called, it happens in wave 1 to 2. It's called a zigzag, this zigzag here, and it's a 5, 3, 5 structure at that point. So that zigzag fits into this particular pattern here. So what we would need to see here, if this was going to go down further, we would need to see wave 4 here and wave 5 here. We would need to see those 5 waves here just to make up that first leg there. But we don't have that. We have 3 waves here. So I think that we're actually done and dusted here. So I think that what we can do now is we can move this over to here, and this over to here, and this to here, and this to here, and this to here. But we just need to be mindful about this as well to a point. So it's possible a B wave can sit over here for this. As I may have mentioned before as well, is that I'm not actually trading this particular market. What I am doing, as I've mentioned before, and to take you on that sort of journey, is simply I'm just buying Bitcoin. So what I decided to do was buy $1,000 a week. So I've got, it's been 3 weeks now, so I've got $3,000 worth of Bitcoin. I've done that through Binance, and then I've got the Ledger drive as well, the little Ledger drive, the Nano S and the Nano X. But I have to say that I've bought the Bitcoin each week, but I haven't had time or figured out how to get it from Binance onto the Ledger drive yet. So that's another task that I have to do. But anyway, I've made a start. I've been buying it every Friday, just $1,000 worth. And that's Australian dollars, by the way. I'm in Australia. And I'll just continue to do that. So to be honest, I don't really care where it goes, you know. If I can put in 50,000 a year, you know, I'm happy with that, you know. I mean, I see this opportunity here. If I see this as if I see the structure in better shape over here, I might chuck 10 or 20 or something on it as well and leave it there. But I'll let you know if I do that. But yeah, as I said, it's my 3rd week. I've just been buying $1,000 a week, and we'll see how we go. So look, I don't really care if it actually, you know, we have another leg down here as a wave C for this. In fact, it would be quite nice, really. But I'm still very happy to continue with this particular pattern here. I mean, if it came down here, I can live with that. But it'd probably be better if it takes out this top here, because then I know that we're on our way at this point. If it comes down here, then we also need to consider the bigger bearish picture of this being an A wave here, a B wave here, and a C wave here, and then it will drop back down below these lows here and come back into this space here. Now, yeah, I don't like, you know, I can put targets out there like I've done here, and we just work through those, you know, just step by step. So as the next step here, our step really is to get the medium level here. I'll just explain this in a minute. So we've got 10,000, then we go to 20,000, but I always use 13 because it's so far away. It's not like 20,000 and 21,000, you know, or in that sort of regard. So I do use 13 as a major trading level in stocks, but I can use it here because it's got a lot of distance here. So a medium level, which is the next level down, so they've got the major levels. Then we've got the medium levels, which is the medium level is always halfway between two major levels here. So the 11,500 is a bit of a weird number, but it's certainly the strongest number in all of this here, become the balance point here, which is obvious here, but you'll see it in stocks as well and in other spaces as well. So we've got major levels, medium levels, then we've got minor levels, and then we've got sub levels, and then we've got micro levels, and they all line up with the Elliott Wave structure. And because we use the golden mean as the price ratio on the side here, it all ties in really quite nicely. And it also brings the psychology into it as well, because when we're using these numbers, you know, people tend to think in certain numbers first. You know, if we were thinking of, well, number 1 here, 10, well, people are not thinking of 11, or they're not thinking of 9. You know, if you got a stock going up to $10, yeah, most people are thinking of $10. Yes, there will be a lot at 9 and 11, of course, but the 10, the number 1, is the strongest number in the market, and everything will gravitate towards that. And when you understand that, it takes a little while for the pennies to drop. These numbers are like magnets, and then these magnets, you know, if they're being used a lot, like this one here, coming back up to the 11,000, yes, we can expect it to mirror this to a certain degree, but because it's already used up its pulling power here, it won't be so much over here again. But the markets have memories, as you know, and you know, it will show up at that point. Okay, look, that's enough rambling on. Let's just sort of recap this. At this stage, we can look at this as 1 and 2 here, and then 1 and 2 here, then 1 and 2, and looking up for wave 3 here, and 4 and 5 for the third wave, fourth wave, and then moving up higher from that point. So moving through all of that. Can it fail at this point? Possibly. It can fail here and move back down, but we'll just keep an eye on it and we'll see how we go. But in terms of trading, we're buying new highs, and away you go. But as I mentioned, I'm not trading. I'm just buying it as a small investment on the side. So also to keep my interest in doing this chart as well. Alrighty, thanks for tuning in. Much appreciated. Cheers.